Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly supply and resistance. From here, all this previous rejection to the downside was created. What we can see is that the market once again has tested the level here and rejected it to the downside. And lately we had another test of the zone. The market has already started rejecting this level to the downside, and we could expect more potential bearish continuation to be created away from this zone. So on the monthly, everything looks quite bearish with the possibility of seeing more bearish development. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, first of all, we have to identify structure. We can see how this zone here is a quite important structure level, which was acting as previous weekly resistance here, which was broken to the upside with this impulse. At that point was turned support here. We can see the level once again acting as support here. However, now that the market has broken it to the downside, this zone is now currently acting as resistance here. So what we could expect is a potential retest of this previous support and resistance before then seeing bearish continuation being developed away from this zone. So we could expect, by looking at the market from the monthly and weekly time frames, to see a bit of short-term bullish price action and then more longer-term bearish continuation. We can also notice that if we look at the patterns of this market, we have an impulse and the start of a correction. And in general, if you have an impulse and a correction and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse leg, which shows us how we have a perfect 50% retracement lining up precisely with this previous support and resistance, creating a confluence of resistance at this zone, which we could expect this market to go and test and then to reject to the downside. Now, if we drop down on the daily time frame, what do we see? Well, from a daily perspective, what we can notice is that the market has now created new structure. But before we analyze that, first of all, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, after this impulse and correction, the market was around this area. I explained all the reasons for which we could expect this impulse, correction, and a higher high. And again, that is exactly what the market gave us. And in the very last analysis, after this impulse, I explained all the reasons for which we could expect this correction, retest, and the creation of a lower low, which is exactly what the market gave us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, looking at this market from a daily perspective, as I was previously saying, we have to identify the new structure. The structure that we have is exactly this zone here. This is very important. Previous daily support, which was acting as support here, and again here, which now that the market has broken it to the downside is acting as resistance. If from here we will go and have a retest of this previous support or resistance, the market would at that point also create a W formation, retesting that resistance. And after the creation of a W, what we could expect is a potential reversal lower for the completion of the W formation at the neckline. So from a daily perspective, if from here the market will create a move to the upside, we will essentially have the creation of that daily W formation testing daily resistance, from which at that point there is the possibility to see more potential institutional shorting, at that point increasing the probabilities of seeing a potential reversal to the downside away from this zone. Now, why do I say institutional shorting? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so institutions and the big players in the market are doing, we can see how with the last reports they have been moving their positioning to the bearish side of gold, shorting gold. They in fact went from having 195k net positions all the way down to 151k net positions, with 2.6k shorts added with the last report and 8,400 longs getting closed. So it is quite clear how institutions have been adding shorts and closing longs. Therefore, they expect bearish development for gold, and they have been moving to the bearish side of this asset. So what we could expect is more potential bearish development, since this area is quite strong resistance as we have just identified. So this means that there is good probability of seeing more institutional shorting inside of this zone, further increasing the probabilities of seeing bearish development away from this area. So if we will have a retest of this zone, how we could be approaching a potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete the W formation and then potentially also head lower, rejecting that monthly resistance that we have identified at the beginning of the video. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description, and at least go and check it out at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.